Hey everyone, welcome back to Land Investing Online, where we teach students how to profitably buy and sell vacant land. This is the simplest, least competitive, and most profitable sector of real estate. For more information, visit landinvestingonline.com. Join our free Discord with tons of successful investors. Come learn from the best. Guys, if you guys are having value or see value from this podcast or YouTube, please like and subscribe. It means a lot to us and it really helps grow our channel. And we love doing this. So please like and subscribe if you get any value from this at all. But I'm Daniel Apke, joined once again by my brother and business partner, Ron Apke. Welcome back, Ron.
Hey, Dan, good to be here.
Before we start, we're going to talk about today's episode is the real estate market update. As of today, I guess we'll do. So after quarter one of 2022, what we're seeing in land, but also the market. We do real estate rentals as well and some other commercial properties. So we're going to give you a complete market overview. But before we get into that, let's get in one of our questions from a member. They said, I have a full cash offer, or no, sorry, I have a full price offer, but it's financing through their bank. What do you think about this? How should I handle this?
Yeah, I like this question. I think we get this question quite a bit from people who are selling their first property, their second property, their third property, and maybe they've done cash for the other deals. If you've had the property on the market for a few weeks or a month or something, take this seriously. Is there a pre-approval, Dan? I thought you mentioned before we were talking. Is there no pre-approval, or did you say that?
They do have a pre-approval.
Okay, so you have a pre-approval letter. That's really good. Some banks won't mess with land. You know this bank messes with land based on that pre-approval letter. Make sure you read through it and make sure it makes sense. It's going to take a little longer to close. The only thing that you really have to go through that's different is they're going to need an appraisal on it. They might need some other stuff. It's going to take probably closer to 45 days instead of 3 to 4 weeks. But it's definitely feasible. I suggest accepting it if you're not getting other cash interested buyers, especially with it being full price. Like, you're going to get all that money back. But that's my suggestion. Unless you're getting blown up on the property, you think you can sell it full price cash in the next few days, I would accept it, honestly.
What percentage of our deals are financing, would you say, Ron?
For them when they buy, I would say somewhere 25 to 33, maybe somewhere a third to a quarter, I would imagine. I don't think it's much more than that. I do think it's going to increase, and we'll probably talk about that a little bit today, Dan. But actually, it might decrease with rates going up. But yeah, I think 25 to 33%.
Awesome. Well, that goes over it. So yeah, take these seriously. I guess that's the bottom of it. Take those offers seriously. If they have a pre-approval and they're interested and they've been to the land, take them seriously. So let's get into the show, the real estate and market update as of right now, as recording this, it's April 28th, 2022. So let's first, before we get into specifics, let's just give you kind of a clinical trial. What do we see from our land business and our real estate business? Say we've never heard any news at all. We don't know what's going on. What are we seeing out there, Ron?
So as far as our land business, correct, Dan?
Correct.
Okay. So yeah, let's keep this part based on land, not on the rental properties and all that other stuff that we do in real estate. But land, what I'm starting to see and what we're starting to see, I don't know if it's like a long-term thing by any means, but the amount of buyers we have for our properties we have for sale seems to be cutting down a little bit. I take buyers a lot more seriously. We used to get 5, 6 buyers who are very interested within the first 24 hours or so. Now it might be 2 or 3, which is still amazing. It's going to sell, but I just noticed a few less buyers, maybe a few less people. I don't think it's affected the prices yet in any sector of real estate, but we're talking about land right now. I don't think it's affected the prices right now because people are still looking for land. I still think there's more people looking than there is land available. And that's what I'm saying, Dan. I don't know how you feel, but and I take care of a lot of our properties for sale. I talk to our realtors. Daniel talks to a few of our realtors as well. And they kind of say the same thing. Like, they just feel it coming, like a few less buyers. People might not be as comfortable spending money right now.
Yeah, and it used to be we'd put a property in a hot area at the right price, and then we'd have 4 offers by, within a few days. Like, that was pretty common, honestly. Now it's we're not seeing that kind of heat. Things are definitely slowing down. It's going to take longer to sell these properties, I think. Not drastically yet. We'll see what happens to the market, but it's definitely changing as expected. I mean, we're going to go into interest rates next, but with interest rates they hit 2.75%, mid to upper twos. Of course, people are going to have more money to spend. Now they're what, fives? We're going to get into that next, but it's just the market's changing, not necessarily for the better or the worse. It's different. I think it's going to be easier to acquire properties because people, as markets get tighter, people need more money. Obviously, markets are getting tighter. Unemployment goes up. People have less money to spend. Standard of living is dropping right now. It's a fact. Standard of living is going down. Things are less affordable. People are getting paid more than what they were, but with the increases in inflation and rent increases and housing increases and everything else involved, people are having a less quality life in terms of finances in that aspect. And we're going to go into that as well. But so let's hop into that then. Let's just discuss interest rates, and then I'll kind of talk about why this affects our business. You might be asking, why are we talking about interest rates when we sell land for cash? Guys, interest rates are important for the economy. It's if you could afford a $500,000 house 3 months ago with a 3% interest or a 3.5% interest, now interest rates are 5.2% or so. That same $500,000 house you can afford now, you can only afford a $380,000 house with that mortgage payment. So things change. It all reflects back to how much money, disposable income you have, right? If people's wallets are getting tighter, not as many people are going to have $100,000 of cash to throw out land for their recreational purpose or whatever it is. So this really impacts the whole industry and economy as a whole. But let's get into that. So 2019, and this is all based on this data, based on the average 30-year fixed rates from what the average consumer is spending. So 2019 hovered around 4% throughout the year, fluctuated a little bit, low fours it hovered at, maybe hit high threes a couple months. 2020, it started high threes and ended up in the high twos. So that's when it really dropped during COVID and all that stuff going on. So we started high threes, right? Like 3.8, 3.9, 3.95. And then we ended up dropping to twos, 2.8, 2.9, 2.78, things around there. 2021, it started in the high threes, started threes. And then it ended up going it trickled up to high threes by the end of the year. So it started low in the low threes, I believe, and then went up into the high threes, right? So 2022, where we're at now. So last year we said we ended high threes. January, it started actually low threes in January and ended up mid threes by the end of January. Then it hit 4%, I think, at one point in January. March, it went up to the mid fours, like 4.6, 4.5%. And then it ended March in the high fours. Now we're in April. It's April 28th right now. It started high fours and then it went to low fives. I think the last I saw it was like average 5.1%, 5.2. So you can see it's trending up, definitely trending up. In terms of how much higher it's going to go, who knows? I don't think it's going to, Ron will talk about this more from our conversation with our account or our loan officer. He thinks it's kind of not topped out, but he doesn't think it's going to go too much higher than it's already. The market's extremely volatile right now. But that's my interest rates update. So you guys have an idea of what's going on. We're in the low fives right now. To put in perspective, we're in the high fives about 12 months ago, high twos about 12 months ago, 16 months ago. So things are going on doubling, which is really big. But Ron, do you want to talk about our conversation with our loan officer that we use for residential?
First off, I don't know how long you guys have been in real estate. I don't know if you've ever owned a house or whatever. Obviously, we have a lot of different types of people and age groups listening to this. This is a historically pretty normal interest rate, correct, Dan, in the fives? What we saw after COVID and everything, that was to incentivize and try to keep the economy moving because people thought it was going to be so bad after COVID. So they dropped the interest rates to high twos. I think I got locked in at my house at low threes maybe. But just for that. But yeah, we are refinancing a rental property right now, not a huge rental property by any means. So we were getting quotes for this for like probably the last 4 or 5 months. We bought it with cash and we wanted to refinance and get our cash out. Probably 3-4 months ago, we were getting consistent quotes for the 4.5, I think, maybe 4.8, maybe 4.8 was the best we got. Maybe 4.5, I don't know. But we were getting those quotes and like we thought those were high, honestly, and we were paying a lot of points up front. So we waited a couple months. We wanted to make sure the rental property was stable because you don't want to refinance and then be not making money on the rental property, not be cash flowing. But since we had any cash, like everything we got was basically just put in our pockets. But we wanted to make sure the property could be cash flowing with our whatever interest rate we got. But we had a conversation with our loan officer, or a different loan officer, like 2 days, and we trust this guy a lot. He seems really good. It's a bank statement loan that we're getting, which isn't like, since we're self-employed, it's tough to get loans sometimes, especially for commercial properties, bigger properties. It's easier. For these small ones and more conventional properties, it's a lot more difficult. It's not the asset that we get the loan based on. It is it's us and our bank statements, all that stuff. Like if you don't have a steady self-employed income for a long time, it's really difficult for that. But going back to the loan rate, I think he said 6.7 or something. Dan, was that right?
I think
or
so.
6. I think 6.7, and he told us some things we could maybe get down to 6.25. And this is on a $250,000 refinance. It's an extra $300 a month or so versus that 4.8, 4.5. Like it's significant as far. I think it's like 850 up to, I don't know, 1,200 or something, 1,150. I don't know, but it's crazy. And he's like Daniel said, the loan officer, he said it's going to flatten out. He thinks it's going to go up a little more. So be aware of that. But then he thinks because it's going to flatten out in 12 months from now, it could be a little lower than what it is currently. But it's definitely something to keep in the back of your mind. I'm selling my house right now, and it's a 3 or 4 month sale because I'm planning on moving 500-600 miles away. And I sold it kind of early. I wasn't planning on selling it as early as I did, but I disclosed to the guy, like, I can't move until like late May, early June. And he was approved for the loan, whatever, early February, maybe even January. He got approved for that loan. And one of my fears is right now, like hoping he still has the income and whatever to support a new interest rate, a higher interest rate, because that's going to be a fact. Like his interest rate is going to be higher. There's no way they locked him in for 4 months. So I'm really hoping I still have a buyer for my house because interest rates, like Daniel said, have almost doubled. Maybe it's up 2% or so. But it's crazy. Like home buyers are having to spend the same amount of money for less house, essentially. So did I say that right?
Yeah. And
Yeah.
going back to what you said, so if we're paying $300-400 more on just our little small $250,000 Section 8 rental, that's going back to just the economy thing on how this relates. If we have $400 a month less because of interest rates of our disposable income, if we're pocketing that, that's $400 less that we have. So that you see, then I have $400 less to spend. My income goes down. Things, it changes the whole game. And I just want to keep reiterating that interest rates change the market as a whole, not just real estate market. Do you have any last things to add to that before we move on to the housing market, Ron?
I think people in their heads, like the thing that sucks is like people in their heads are kind of whatever. They're trying to save money. They're trying to make money, a certain amount of money to be able to buy, let's just say $500,000 house. I don't know what you need to make for that. But if you had to make to be able to afford a $500,000 house, maybe $150,000 12 months ago, you now need to make probably 200 to 225 to be able to afford that. Not to be able to get approved for that, Dan, I think. I don't know the numbers exactly, but that's just the thing. Like people are going to have to, and I think it's going to cause some of the housing prices to definitely flatten out. And Dan will talk about this next, but possibly go down a little bit. But it's just, you have to make more money to be able to afford the same house. Like it's just a fact. You're not going to get approved without it.
Exactly. So let's go over the housing market update then, because this has affected everyone. Everyone knows how hot the market's been. You hear everyone talking about it. And it's true. It's been hot. So last year in 2021, the housing market was up 15% from what started in January to December. But if you take, what is it, April 28th, if you take April to last April, it's over 20%. So it just shows that it's continued to heat up in 2022. And Zillow predicts another 15% growth this year. That's aggressive. I don't know if they counted in the mortgage rate increase or if they saw that 15% is the highest I saw. They predict 2022 another 15%. Then there's companies like CoreLogic and these other Blackstone and all these other big guys. They predict more. I saw 5%, 7%, low figures like that, which is still great. I mean, that's still historically really good for the housing market. So either way, Zillow's very aggressive with their pricing, or with their estimates. But increasing mortgage rates, like we just spoke about, it's putting pressure on property price growth to slow. So maybe because not as many people can afford a $500,000 house, maybe there's going to be less buyers on the market. I mean, you assume it would trickle like that from an economy standpoint. So there's going to be less buyers for that price, what there was. And then hopefully because there's less buyers, inventory stabilizes out. Right now, there's such a shortage on inventory and such a high demand. That's the question too. Like, how high is the demand? Is the demand normal or is the demand high? That's what they really don't have a set. I guess they don't have anything concrete on the demand right now that I could really find. I saw so many mixed messages. Is it the demand or is it the inventory? And I think a combination of both, because people do have more disposable income right now than they've had. But that's kind of my take on that. The other problem that we're facing, raw material cost remains very high. Lumber's high, lumber's very volatile. Builders continue to struggle to keep up with the home buyer demand. Not only that, supplies are hard to get. There's waiting lists, there's shortages, and just back orders out everything really. Which I could go on a rant, and Ron and I have been looking at different modular homes and different ways to build, because the tighter the market gets, it might take something like this to realize the construction industry is so behind. I mean, we're sending a crew of 8 people to a home site to, dig, pour concrete, order materials. Materials sit there. They're waiting on materials. They're calling. They're saying it hasn't arrived. They're going back and forth. They're coming back to the site. They're sitting around. Waste, 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 waste. There's so much waste on traditional builds. It boggles my mind. It's old school and it hasn't adapted yet. Ron and I are looking at modular homes. I was looking at all these factories yesterday. They have these big factories, million square feet type factories, and they are zipping these material down the conveyor belts. Boom, installing. These guys are just waiting for the next material to just zip down. They're grabbing it. They're grabbing the windows, putting the windows on, zipping it tight. Next material comes, boom, boom, just banging these things out. That's modern construction. That's what we need to do to combat these issues. I mean, there's solutions to this. Maybe it takes an economy like now where no one can get a house affordably. This stuff's getting tight, right? We need to look for ways to combat this. And one way to do that is these modular homes they're building in these factories. They're ordering all the materials there, right? They're getting all the windows, all the lumber. They're getting it all. They're storing it in their million square foot factory in their lumber yard out back. And they're just zipping this material, building, shipping it out to the site and installing on a concrete pad. That's how we need to be looking at things. And I can keep going, but let's keep moving on. And then Ron, I want to hear your feedback after I finish this.
Go ahead.
Just a few other things to wrap up for the housing market update. So far we have, we talked about 2021, what we saw last 12 months, all that stuff. The Sun Belt is by far the hottest real estate market. Over 20% growth. Here in Tampa, it was over 30% where I'm at. Texas is super hot. Arizona, all the Sun Belt areas, extremely hot, by far the hottest market right now. And at current levels, the typical American right now has to spend almost 30% of their income on their mortgage payment. So lack of affordability continues to increase. People can spend less on their houses, or they're spending more on their mortgage than ever compared to their income. Like we said, prices are rising more than the income's rising before. And that sums up what I have to say. Ron, what do you have to say about that?
No, it's a lot of good info, Dan, and I'm excited about the modular home stuff. I think it's like you said, it's the future, and I think if you get ahead of stuff like this, you can make a boatload of money. And our ability to acquire land cheap, I think, can be very valuable with modular home stuff and those kind of deals. But I think Zillow is crazy as far as saying 15% growth. I know they had that whole thing last year when they bought overpaid for a bunch of houses and sold them for less. I think their prediction is way too optimistic, I guess. It doesn't make sense to me how it's going to grow another 15% with interest rates doubling. Like it doesn't add up to me in any way. People just don't have, they have money, but at the same time, like everything's going up, and to go up another 15% after 20%, it just doesn't seem feasible to me. I think there will be markets where this happens. I think Tampa, that the nice areas in Florida, Fort Lauderdale, Miami, Tampa, St. Pete, Phoenix out there, Austin, Texas. Like these are places people are moving. They're moving from California. A lot of people are working remote. So naturally, there's going to be a supply and demand issue in those places, and rent prices are going to skyrocket there. I know you're renting down there, Daniel. I know you saw it in the last 12 months alone where you are. Rent prices in these hotter markets are going to skyrocket along with real estate. So yeah, those can definitely go up 15 to 30%, I think, just because so many people are flocking, so many people are working remotely still, and it's a long-term thing. So many people are starting their own businesses and making money online like this. But yeah, I mean, that's really all I got, Dan. You covered a ton of that as far as that. But I do think the market's going to flatten out, in my opinion. I don't think it might take a little dip in some markets, but I think overall the market is going to flatten out over the next 12 months. Where as I don't think the interest rate thing has it definitely hasn't fully hit the market, in my opinion. People don't realize it. Like how much a 2.5% interest rate increase is causing in their monthly mortgage payment, and how much that's going to take out of their other disposable income. I just don't think it's hit yet fully, because everyone still wants to buy and there's not that much inventory. But then people are going to look and like they're going to start getting denied for loans, Daniel. I think that's the next step, honestly, is people are going to, maybe they got approved a year ago and they just didn't have the down payment or something. They're not going to get approved for as much loans, and then naturally the prices in some markets are going to go down.
Yeah. And it's just things are continuing to tighten and tighten up, I think, and eventually it's gonna hit harder. I don't know what it looks like in the future. It's just, I mean, you can only increase so much until it's like someone told me yesterday. They're like, because Tampa, obviously, this area, it's one of the fastest growing areas in the country. And someone told me yesterday who goes back and forth to Austin, Texas all the time. It's normal in Austin, Texas right now to get 1,000 square foot place, right? It's normal in Denver, Colorado to get 1,000 square foot home and spend $1 million on it. In Austin, it's getting there too, $1,000 a square feet. That's normal now. Tampa, it's not normal, but it's getting there. So I'm like starting to think about that on my drive home from yesterday. I'm like, dang, 1,000 square feet for $1 million. Like that's where things are heading. You got to get ahead of this stuff. You got to see the trends in the hot markets, but you also have to be hesitant in the hot markets, because CoreLogic did a study and they said that 65% of homeowners in these markets are overpaying. So they're losing equity. They're buying into a loss, realistically. And when I was buying a house down here, they told me, they're like, yeah, if this doesn't appraise for your offer, you have to cover it. I'm like, doesn't appraise for my offer. And I was just like, wow. So that's normal here. 50% of the places don't appraise for their offer, and you got to cover it because the loan companies see that you overpaid. And it's good right now, because if you did that 4 months ago, now things are a lot higher than 4 months ago. But if you do this now, 4 months from now, who knows where things are going to be? So you just got to be careful, be ahead of this stuff. Don't be overly optimistic. Listen to all these billionaires talk, these real estate gurus, the Mr. Wonderful, what's his name? Him and the owner of the Mavericks, Mark Cuban. And you listen to these guys talk, they're optimistic about a lot, but they're also very hesitant. They don't like to jump at things right away. They see the over optimism and they make money off of that in other ways, but they're not the ones in there putting $50,000 over asking price offers out there. You hear them talk about diversifying and all this stuff, and I can go on a rant on that also, but you just really have to be careful. Don't buy into all the BS, because things will change eventually. And our generation, I'm in my 20s, we haven't seen a significant downturn yet. And all these people think they're making millions of dollars right now. But let's see how they last through a big recession. Let's see how they last long-term, sustainability type stuff. These people who are spending all their money and analyzing their deals based on short-term rentals, that can change. Like, you just have to play it for the long haul, not for the short game, is all my advice on that. But let's go into rental property updates. All right. So like Ron said, rental prices are sky rising. Tampa hit 34%. All these other markets pretty much averaged if it's somewhat of a decent market, averaged over 15%. Even like Ohio, places like that where I'm from, over 15% increase. The median was over 15% in the US state by state. Like I said, states like Florida saw over 30%. Single family rentals are picking up because the inventory is so low and so hard to get, and people still need to raise their families and want single family homes. That's picking up. Studio rentals right now, because of how expensive things are getting, like we said, lack of affordability. Maybe efficiency apartments become a bigger thing. Maybe those get trendy. Who knows? But affordable housing is going to continue to rise. There's only so many people who can afford this outrageous BS. It's just not going to last forever. So keep your eyes on that, guys. I'm telling you, in these hot markets, affordable housing needs to be a thing. It's going to be a thing. Just keep an eye on it. Everyone right now is looking at the luxury market. Just wait till the the efficiency units and all that stuff comes around. Keep an eye on that. So studios are increasing the most right now because of that. So I think it was 4 units were increasing the most because they're so rare in the rental world. But since things are so expensive right now, studios just outpassed all that. They're growing at the highest rate right now. So studios are becoming a hot thing. Before, no one even looked at studios hardly. That's really it. I mean, just like the housing market, it just kind of reflects off of that. Things are going crazy. My rent increased a crazy amount. Everyone else has increased a crazy amount. It's just something we're dealing with. My income didn't change that much, but I'm paying a lot more for my rent now. So that's really that, Ron. What do you have to add?
Yeah, I was just thinking when you were talking about studios and stuff, like when we were, I mean, not when we were growing up, I mean, when we were growing up too, but like I've probably been in real estate and been interested in 15 years or something since high school and stuff. And I took it pretty seriously. I didn't make any moves that early, but you always heard about studio apartments. And where were they, Daniel? They were Los Angeles, San Francisco, New York, Manhattan, Brooklyn. They weren't in like Midwestern cities. And now these are becoming popular, which is sad because people aren't getting as much space to live. And their rates are still going up so much. So people are in demand. They're looking for the smallest things because that's all they can afford. Like Daniel said, like affordable housing is going to become a thing. Mobile homes, as we see it with our industry with the land, are going to become bigger. I think more cities are probably going to become more lenient on letting mobile homes. Like there are really really nice mobile homes, and as everyone is more remote and more rural, I think they're going to become even bigger because people don't need to live close to a big city or really close to a big city nearly as much as they did 3, 4, even 3 years ago, and even 10 years ago, obviously. But I think affordable housing is a huge thing. We see it in our rent because we own rentals and we have contracts. We use management companies for all of them, and we have contracts come up, and the management companies are always like, we thought we were priced well. They're like, no, we got to up this, and it's whatever from $600 to $900, from $900 to $1,200, and it's just crazy. And it's helping us obviously, and helps the value of our rental properties. But I also understand, and we talked about this. You talked about this at the beginning, Dan. Like wages are not going up the same. And just one thing, real quick, and then we can wrap it up. I think, Dan, is if you're in a 9 to 5 job, a normal one, especially if you have a skilled job, shop around your skill. It's not okay. Like if you're not getting raises based on what inflation is and based on what all this is, shop around your skills. I trust me, you are going to get better offers than what you're making. Our brother, he got it might have been 30%, Dan. I think a 30% raise because he was very serious. He was like, I'm going to leave. I'm not making enough money here. I know my skills. I know my worth. And he got an offer from another company for a 30% increase. His company, good for him, I guess. Good for him since he got to stay at his company and they matched it. His plan was never to leverage this with his company, but the company knew how much more it cost. They're going to have to hire someone at the end of the day for what he ended up getting. So why not just offer him that? So shop around your skills, go do interviews and that stuff. Like, and you push for your wage to be increased along with inflation and everything else.
Really good point. Yeah, our brother made a good move with that. You can get higher offers. You can get more disposable income. Do what you know you're worth. That's definitely my advice. My other advice is when things are this volatile, diversify. Don't buy into the one hype. Diversify your portfolio, because if 2007, 8, something like that happens, which it will in our lifetime, things will drop. You want to be diversified. Don't buy into the heat. Those people are the ones who go bankrupt. So diversify, diversify, diversify. That's all I have, guys. If you found any value from this at all, please like and subscribe to our YouTube channel or the Spotify podcast, Apple podcast, whatever you're listening on. Please, please, please. We really appreciate it. Like, subscribe. Also, visit landinvestingonline.com. Join our free Discord. It's a chat. Discord's a live chat if you don't know what it is. And Ron and I are in there with tons of successful investors. Come learn from the best. Thanks for joining, guys.
Thanks, guys.